So you're thinking about buying your first home in Canada? That's awesome. It's easily one of the biggest, most exciting things you'll ever do. But let's be real, it can also feel like a total nightmare to figure out. Today, we're going to cut through all that confusion and give you the official playbook for 2026. Let's get right into it. I mean, seriously, does it feel completely impossible? If you've looked at the prices, listened to the news, and just felt that pit in your stomach, you are definitely not alone. It is 100% normal to feel like home ownership is just out of reach. But our whole goal here is to change how you see that.
Because here's the secret. It's not actually impossible. Buying your first home these days, well, it's not just about finding a cute place you like. It has become a full-on strategic financial project. And just like any project, if you have the right plan, the right playbook, you can absolutely win. And that playbook, it all starts with your down payment.
Okay, so the government has actually created some incredibly powerful tools, and their whole purpose is to help you build a down payment way, way faster than you could on your own. We're going to focus on the two heavy hitters, the First Home Savings Account, the FHSA, and the Home Buyers Plan, the HBP. All right, first up, the FHSA. You know, when I first read about this thing, I honestly thought there was a typo in the government memo. The researchers call this a game changer, the holy grail of savings accounts, and for a very, very good reason. This slide right here breaks down the magic. The FHSA literally smashes together the best parts of Canada's two most famous accounts. From the RRSP, it takes the tax deduction, so every dollar you put in actually lowers your taxable income, which means you get more money back on your tax return. And from the TFSA, it takes the tax-free growth and tax-free withdrawal. So when you pull that money out for your down payment, every single penny, including all the growth, is yours. No tax. It's unbelievable. Now, of course, there are some rules. You can put in up to $8,000 a year with a lifetime max of $40,000, and you've got a 15-year window to use it after you open the account. But this brings up the single biggest question I hear. What happens if you save all this money and then you just don't buy a house, right? Is it all stuck? The answer is no. And this is the most brilliant part. You can just roll the entire amount, everything you put in, plus all the investment growth, straight into your RRSP, totally tax-free. And get this, it doesn't even use up your regular RRSP contribution room. It's like you created that room out of thin air. There is literally, and I mean literally, no downside. Okay, now let's talk about the OG, the old reliable, the home buyer's plan. This one's different. It's not for new savings. It's a tool that lets you tap into the money you already have saved up in your RRSP. Think of it like getting an interest-free, tax-free loan from your future self. And this program just got a massive upgrade. The old limit was $35,000, which, let's face it, doesn't get you very far anymore. The government saw that and cranked the limit all the way up to $60,000 per person. So for a couple, that's potentially $120,000 in firepower you can pull out. It's a huge, huge change. So here's the key. The real pro move isn't picking one or the other, it's stacking them. Just imagine a couple. They each pull $60,000 from their RRSPs. That's $120,000 right there. Then they add whatever they've managed to save in their FHSAs on top of that. All of a sudden, a down payment of close to $200,000 is actually possible. For a lot of people, that's the only way to hit that magic 20% number and skip paying mortgage insurance. Okay, so you're busy building that down payment. Awesome. But at the same time, the rules of the game itself have been changing. So next, let's look at how some recent policy shifts have totally changed what you can actually afford. This is a big one. For a long, long time, first-time buyers were stuck with a 25-year mortgage plan. But now, they can get a 30-year amortization. Now, yeah, you'll pay more interest in the long run. But the benefit right now is massive. A longer amortization means a lower monthly payment. And why does that matter? Because that lower payment makes it so much easier to pass the government's mandatory mortgage stress test, which is often the biggest wall people run into. The government's also trying to help out in other ways, especially if you're looking at a new build. There's a new GST rebate that could put up to $50,000 cash back in your pocket. And just to clear up any confusion, you know that old program where the government would own a piece of your house, the shared equity thing? It's gone. They got rid of it in March 2024. Good riddance. So, you've got your savings plan, you get the new rules, now what? Now you have to make a really critical decision. Who are you going to partner with to actually get the mortgage? This isn't just about finding a loan. It's about picking the right financial ally for your team. And this chart illustrates the difference perfectly. Going to your bank is like walking into the Nike store. They're great, but they can only sell you Nikes. A mortgage broker, on the other hand, is like your own personal shopper. They have access to dozens of lenders, the big banks, smaller credit unions, all of them, and their entire job is to shop the market to find the absolute best deal for you. But look at that last line, because it's the most important. The bank employee works for the bank. A broker works for you. Now, I know what you're thinking. Okay, but doesn't a personal shopper cost a lot of money? This is a huge misconception. For most buyers who have good credit and are getting a standard mortgage, the service is totally free. The lender, the bank that gets your business, pays the broker a commission. So if you've got your stuff together and a broker asks you to pay them a fee up front, that is a massive, massive red flag. Just walk away. Pulling all these threads together, the best rates, the new 30-year rule, the whole application process, that's exactly where an expert ally can be a game changer. For instance, the source material we reviewed pointed to a mortgage brokerage, Muneris Financial Services, as a good case study for the kind of partner that helps buyers put this whole puzzle together. Yep, that example was Muneris Financial Services. A professional like the one shown on screen, they specialize in doing all that shopping around for you, helping you manage the timeline and build the right strategy from day one. Having a guide like that can make all the difference. The contact info is right there if you want to look into that type of service for yourself. Okay, wow, we have covered a ton of ground. We've gone from savings accounts to new government rules to financial partners. So let's pull it all together now into one simple step-by-step roadmap for your entire journey. And here it is, the whole thing, A to Z. Step 1, power up those savings. Use that stacking strategy with the FHSA and HBP. Step 2, get pre-approved. Lock in a rate and know exactly what your budget is. Step 3, choose your ally, bank or broker. Step 4, go find your home. This is the fun part. And finally, Step 5, don't forget this one. After you move in, claim every single rebate and tax credit you possibly can. So here's the big takeaway. Buying a home in 2026 isn't just about luck. It's about executing a smart financial strategy. It's about using leverage, leveraging government programs, leveraging new rules, and leveraging a professional to help you put it all together. You now have the playbook. You know the moves. And that brings us to our final question, and it's something to really chew on. We've talked about all these new tools, longer mortgages, bigger loan amounts, but are these rules actually making housing more affordable, or are they just giving us new ways to take on more debt, which in the end just keeps pushing prices higher? It's the big picture question to think about as you start your own journey.